Good morning and thanks so much for joining in. This is Ask Profit on NDTV Profit and my name is Alex Mathew. Like the name suggests, this show gets you answers to all of your stock-related questions. If you've got questions for us, you can send them on the number that you see on your screen or in fact on any one of our social media platforms. But before we get into those questions, let's take you through what's happening with the markets today. And we started with quite a bit of a downtick for the benchmark Nifty 50, but we have moved off those lows and we're currently trading with cuts of about 0.6% or so for the Nifty 50, and the broader markets have also recovered quite significantly. In fact, the small cap index, which was down over 2% at one point, is now down only about 1%, and the mid cap index, the mid cap 150, which was on your screen just now, is just down about 0.9%. At the same time, you will of course notice that the market breadth is tilted in favor of the declines. Let's look at some of the key contributors on the Nifty 50, and you will notice that right on top of the screen you have Reliance Industries, which is contributing the most points right now. ONGC also doing quite well for itself in trade today, and you have Hindalco as well as Bajaj Auto that are among the other contributors. On the losing end of the spectrum, you have ICICI Bank as well as HDFC Bank and Infosys from the IT pack that is not doing too well in trade today. But we will be talking about Tata Consultancy Services in just a bit because that is in fact the focus of today's show. Let's take a look at some of the sectoral performers as well, and you have IT as a pack that is not doing too much. In fact, in trade today it's down about 1% or so, and you have the biggest losers in the form of media as well as PSU banks. On the other end of the spectrum, metal counters have been gaining because the underlying commodity, you have copper prices, zinc prices, a few other commodities that are also going up, and metal counters have been gaining on the back of that. But let's focus on Tata Consultancy Services because, as you know, the Q4 numbers came out over the course of Friday, and over the weekend it was delved into in quite a bit of detail. The question is, what next if you're holding TCS or if you're contemplating buying into TCS right now? So let's lay out the facts for you. We've got Rucha joining in to perhaps give you a bit of an answer to that question, and then we'll go to the experts. Rucha, what can you tell us?
Yeah, so thanks, Alex. So as we all know, the Q4 numbers are out, but the main question still remains, what next for TCS? There are three things that can answer that question. On the positive front, there are 2 points. Deal wins are at an all-time high, while EBIT margin has improved 100 bips sequentially on the back of subcontracting costs, which we had already mentioned in the run-up for the preview. On the negative front, the deal wins are not getting converted to revenue, and hence there is a miss on the revenue top-line growth. However, what does this mean for FY25 outlook? The management does say that FY25 will be better than the FY24 on the basis of the all-time high deal wins. But the question is, will those deals get converted into revenue? Because there are possibilities that the deal can be cancelled or can be paused based on the uncertain macro environment. Does the brokerages think whether this deal wins are priced in or not? Maybe not. There are 27 buys, 9 holds and 10 sell recommendation on the stock. The consensus target price implies an upside of 4% from today's price. The stock is currently trading at a 12-month PE of 28x, which is near its 5-year median.
For laying out those facts for us. The consensus target price upside potential is only about 4%, which is not very significant if you think about it. Let's find out what our experts have to say about Tata Consultancy Services. We've got Gaurang Shah, Head of Investment Strategies at Geojit Financial Services, and Rajesh Palvia, Senior VP Technicals as well as Derivatives at Axis Securities, joining in. Thank you so much, gentlemen, for taking the time. Gaurang, as I understand it, you're reviewing things as it stands, your view on Tata Consultancy Services, but what can you tell us? What did you glean from the earnings picture that you saw and the management commentary?
Thank you, Alex, for having me on the show, and morning to all of you also. As a brokerage house, Alex, we at Geojit have been positive for a pretty long time. We also know the fact that over the last 2 years or so, there have been a lot of views on the negative side for the IT pack. we maintained our consistent positive stance, keeping in mind the longish performance of the IT sector. There were headwinds in terms of discretionary spend, budget cuts, large deals not coming through, uh, headcounts being restricted because they had stopped the campus visit, etc., etc. What we made out of the numbers was that it was aligning with our expectation in terms of recovery as far as FY25 is concerned, and that's what exactly your colleague also alluded to. So we expect the turnaround to happen. It is going to be gradual, and so it's not going to be something that will open up, extreme positivities or miracles to happen. It's not going to be that. Numbers that TCS reported last week, Friday, post the market, it supports our view. Uh, Deal wins not getting converted into revenues is something that will translate over a period of time. So we had maintained a positive view on TCS with targets of in excess of 4,400. Since the number is out, we are reviewing TCS right now. So I won't be able to give you a clear-cut answer since it is under review. But keeping in mind the current scenario in terms of cyber attacks, etc., etc., I think any small, medium, large, or MNC company would want to keep their IT environment and platform safe from any external attacks. That's where you are going to need the services of IT sector. So it's work in progress, and I think it will translate into positivities over the next 2 quarters as well.
Right, and we'll have to look at the other earnings as well. I don't think that you can extrapolate TCS results for the rest of the industry as well. It's too hard, I think, and too much of an uncertain environment. Let's move to the rest of the queries that have come through. In fact, let's start with the first one on Bharat Highways InvIT, which is a recent listing, as you all will know. This is coming in from Anuj. Anuj is asking this question. He's writing in from Saket in New Delhi. And since it's a new listing and it's an InvIT at that, Gaurang, I'm curious what you say about this. He's been holding since IPO price. He's asking if we should add more. And I guess this is part of an overarching strategy on your portfolio, right?
Yeah, it is, Alex. But unfortunately, because of the regulation and coverage not being there, I won't be in a position to answer a clear-cut buy, sell, and hold. But I think, if we expect the government to come back and if we expect the infrastructure creation to happen at a very large scale, and we need that if you want to take your GDP from current level to the next level. I think we don't only need new infrastructure, you need to reinforce and modernize the existing ones. And we've all heard about what the Honorable Prime Minister has said about how he wants to take the next leap forward. So anything that is associated with creation of infrastructure, whether it is going to be airports, ports, dedicated freight corridors, expressways, highways, or anything else, will be in the spotlight for good reasons. My only request to your viewers of NDTV Profit would be that look at consistency, look at the capability and experience of the company to execute the order book. Having large order books is one thing, Alex, and executing that large order book and translating into revenue is something else. So please keep these points in mind.
Fair point. Let's take the next question. This is coming in from Hari, and Hari is asking about a short-term view, or rather, wait, I'm taking somebody else. Thyrocare. Let's pull up Thyrocare. It's a question from R.K. Anand. He's writing in from New Delhi, and he's asking about whether or not it should be sold at this point. He's bought at levels of 1386, and the stock is currently trading at 620. So he's got a significant loss. The question is to you, Rajesh, on the charts. What should he do? What's the strategy to employ right now?
So, morning, Alex. So, in Thyrocare, we have seen, a very strong supply pressure in last couple of months, and the stock still not able to recover from the recent low, which has formed at around 500, 450 kind of level. Stock still struggling to cross its, immediate resistance area, which is placed at around 700, 720 mark. Though there is a stock is already in oversold trajectory, and healthcare space is showing some bit of traction in terms of buying in last couple of trading session. Stock is holding around its last 4-5 days trading range. So I think some pullback action we can see, but still his purchase price is very far from the current market price. And even looking at the long-term, short-term structure, there is no as such, upside we can see beyond 750 to 800 in the next couple of months. So that's the extreme range where we can see the stock in next couple of months. But it will take a long time. We have to keep focus on the fundamentals also of the company, as his purchase price is very high. So I think in pullback, if it comes near to 750, 800 zone, try to exit from the stock and try to shift in other same peer company like Metropolis is looking promising. So I think at that time he can shift to Metropolis or Lal Path Lab. That stock can be looked at to buy, because both stocks are looking promising on the technical front. But Thyrocare is looking weak on the long-term structure also.
I think a lot of people got into this counter in this space, in fact, around the time of the COVID-19 pandemic, when things were looking particularly good for diagnostic companies. Let's talk about Major B.V. Naik's question. He's pointing out that he's 73 years old. He's a retired army officer. Thank you so much, sir, for joining in and for asking your question. He has bought Yes Bank Gaurang in 2019, 350 shares at elevated levels, obviously. And he's pointing out that this was bought at close to 296 rupees a piece. Now, not every day that you see a situation like a Yes Bank, where you see a frontline bank or at least a reasonably sized bank that loses ground very sharply. Having said that, considering that he's already lost all of this ground, would you say that it's a better idea to keep holding with the optimism that things will look better going forward?
Well, first of all, salute to Captain Naik for the services that he has done for our country. On the question as far as Yes Bank is concerned, Alex, we had a buy recommendation. We converted it to sell because of the issues which were known to all of us as far as the earlier management is concerned. So we changed our stance from buy to sell. The sell targets were in place and we have removed the coverage. So currently we don't have any coverage. Unfortunately, addressing the earlier question also about Thyrocare, if you let your capital erode 50%, 60% or more, it becomes extremely difficult for that investor to recover the capital. Forget about profits over and above that. So my humble request to all your viewers is that take appropriate steps when you feel that your risk alarm is getting triggered off, or you're reaching the limits or boundaries. Don't wait for your capital to erode so much that the recovery of capital becomes extremely difficult. Having said that, well, I don't know, he's retired, he's already 75 plus. Risk appetite is something that you must have in stock markets, especially when you are in this kind of a dire situation. No specific comments, but one private sector bank that we have turned positive after our sell recommendation is IDFC First Bank. I think this is a better alternative.
All right, so that's the view. We'll take one more question. This is on Hari's question. Hari's writing from Chennai, and he's looking at Rico Auto and Time Techno, and whether or not these are good stocks to get into from a short-term perspective. Any view on this, Rajesh?
So if I analyze both the stock, Time Techno on a technical ground is looking more promising. The way stock has moved up in last couple of weeks, and stock is trading about all its short-term, medium-term moving averages. That shows that there is a strength on the near-term, short-term structure. So if he wants to take a bet for short-term perspective, he can keep his stop loss at around 245. And on the higher side, we expect this momentum can extend further once his stock crosses about 275 zone. If it's gives the breakout about 275, then possible target we could see towards 300 also. So keep your stop loss at around 245 to buy Time Techno for short-term perspective. In Rico Auto, there is some corrective movement is taking place. Stock is now slipped below to 20-day moving average. Looking at the near-term, short-term structure, we believe that on the downside 125, 126 is the immediate support area that is important and crucial for this corrective move. In this correction, if it stocks manages to hold above 125, it's not break below 125, then possible he can try to take some positions around those level with stop loss of 120. On the higher side, 140, 145 is the major supply zone on the near term chart. If stocks crosses those level, then possible upside we could see towards 165 also. So near term, short term structure for both the stocks are looking positive. But for Eco Auto, I think wait for another 2-3% correction to enter in this corrective move.
Got it. All right, so that's the comparative between Rico Auto and Time Techno. We have to slip into a very quick break, but we'll be back on the other side to take more of your questions, so do stay tuned. Welcome back. You're watching Ask Profit, and we're in the midst of the queries segment of this particular show. And we've got a question from Mohit from Ludhiana, and he's asking about whether to buy Fortis Malar hospitals, considering the dividend payout. Gaurang, do you have specific coverage on this one? And if not, what would you say about companies in your coverage that have a higher dividend yield and at this juncture, and that have traditionally been high dividend paying companies?
So, one of the companies that I can immediately think that comes to my mind is a public sector company called Power Grid Limited. This is a great monopoly play as far as power transmission, distribution, and grid network is concerned, Alex. From last year Feb till this year Feb, I think they've given out some 4 dividends amounting to almost about 20 odd rupees, if I remember right. And along with that, there was a bonus, 1 share for 3 shares held, 1 bonus for 3 shares held. And despite of all that, the stock has virtually trading at its all-time high or near about those. Then you have, of course, by default, government-owned companies, oil marketing companies, exploration companies, defense-related companies, which have, historically good dividend paying track record. As far as Fortis Malar is concerned, well, don't have specific coverage on this one, but in the healthcare hospitals, we have 3 coverage: Apollo Hospital, Narayan Rudalaya, and Fortis Healthcare. We are also of the opinion that, these hospitals already have the services which the diagnosis companies offer. So instead of looking at diagnosis company, it is better to look at hospitals or healthcare.
All right. The next question that we'll take is a short-term question, and it's on Voltas, which Chinmay has bought. Chinmay is writing in from Udupi, by the way. He's bought at levels of 1,100, and he's asking whether to hold or sell. He's in the money, or rather, he's making money at this point. Rajesh, what's the view on the charts?
So we have seen very strong rally in last couple of trading sessions, though stock is witnessing some supply pressure from its multi-year supply zone that is placed at around 1300 kind of zone. That is coincide with its swing high of year 2021-22. So I think once stock manages to cross and hold above 1300 kind of zone on a weekly closing basis, yes, there could be another round of rally we can see in Voltas. So for near-term perspective, some corrective move is taking place, but still if we analyze the overall structure, till stock is holding about 1250, 1240 zone, trend is likely to remain on the bullish side, and once stock crosses about 1300 level on a closing basis, this rally can extend towards 1340 to 1360 also in the short-term perspective. So hold your position with stop loss of 1245.
Just quickly checking, Rajesh, do you have enough data on Gopal Snacks?
No, I don't have.
Okay, fair point. Then, Gaurang, we've got a viewer who has bought during IPO stage and is wondering whether to hold on to this. Hasn't yet got the issue price. This is Vinod who's writing in from Chennai. What would you do? Would you hold on to this?
Well, so it's a recent IPO, if I'm not mistaken, Alex, and the floor was somewhere close to about 401 at the level at which the IPO shares were allotted to investors. Via an IPO note, Alex, we had given a subscribe recommendation on Gopal Snacks Limited. It's basically a Gujarat-based company planning to branch out to pan-India level, has got dedicated snacks offering as far as the Gujarati palate is concerned, Alex, and it is also, increasing into other states in terms of flavors, etc. Stiff competition is there already from existing competitors, but it has got a very niche play. It'll take time for the company to perform, given the penetration that it has to do pan-India level. So in case if you are a long-term investor, you can stay invested in it. That's what we have recommended in our IPO note.
Okay. The next question is for you, Rajesh, and it's on DMart. We got Samir who's writing in and saying that he is in need of funds, which is why he needs to sell, and he's looking to sell Avenue Supermarts. He's bought at levels of 4050. At what level can he contemplate selling?
So very strong rally in last a month for the stock, and now stock is consolidating. So I think he should trail the stop loss towards 46.40. If it's not break below 46.40, so I think he can hold, and I think in pullback of another round of rally we can see towards 4800 also. But if it breaks below 46.40, he can book some profits.
Okay. Shraddha has got a simple question for you, Rajesh. What is your buy today, sell tomorrow strategy?
So we are focusing at this moment on the stock like AB Capital. That stock is looking promising. One can buy this stock. Looking at the overall structure, we believe that if it stocks holds about 200 mark, then possible rally can extend towards 212 to 215. So AB Capital is a buy with stop loss of 200. The another stock that we like at this moment is from the pharma space, that is Lupin. Stock is looking promising, and the way stock is consolidating since last couple of trading session on very narrow range, we expect that once stock crosses about 1635, then possible rally can extend in Lupin towards 1680 to 1690. So one can buy Lupin also with stop loss of 1580.
GSK Pharma is the next counter that we're talking about, and we don't really have we have Vishal Singh who's asking about this. He's bought at levels of 2150. Let's see where it's trading. It's below his buy price. Gaurang, specific coverage on this one? If so, what should he do?
Well, no specific coverage, but a niche MNC pharma name, Alex. earlier known as GlaxoSmithKline Pharma. Now it is GSK Pharma. I've got some very interesting, strong power brands and market share. Equally strong is the balance sheet, and as far as the management is concerned, there is absolutely no question mark over there. Unfortunately, no coverage, so I won't be able to give any more specifics.
Okay. SRF is the next counter that we want to focus on. Amit Kumar Nigam is asking about this. He's bought at levels of 2444, 2444. He's asking whether to book profits right now. What's the view on the charts, Rajesh?
So we have seen a rally in most of the chemical stock, and SRF is also one of the stock. Looking at the near-term structure, there is a breakout on the daily as well as on the weekly chart. Stock is comfortably holding about to 20-day moving average. So I think he has already bought at lower price. So now the strategy he can adopt at this moment is keep trailing stop loss at around 25.70, which is important level to watch for now. If it holds 25.70, then the next level on the higher side where he can look to book some profit around 26.60, 26.70 zone. That's the level we can see in the stock. Or if it breaks below 25.75, then exit from the position and book the profits.
All right. Well, that's a specific recommendation on SRF. Gaurang as well as Rajesh, thank you so much for joining in and for answering all the questions that you did answer today. Viewers, we're completely out of time on this particular edition of Ask Profit. Hopefully, some of the answers that you got on this program helped you out, even if your specific question was not answered. We've got lots lined up over the course of the day, so do stay tuned. This is NDTV Profit.
Hello and welcome. This is Hot Money. I am Alex Mathew, and in this show we take you through all the stocks which are buzzing in trade and have been the flavor of the season. For now, let's take a look at the markets which have